and gentlemen, a very warm welcome to you on Business Today Television on this fine Friday morning. We are on the last working day of October 31st. The festival season has drawn to a close and earnings are coming up thick and fast from companies that may have benefited from the wonderful cut in GST and other tailwinds that are in this economy. We are now joined by the management of Transport Corporation of India. This is the nation's largest multimodal transport company, and with us is Mr. Vineet Agarwal, MD for Transport Corporation of India. Sales for the quarter gone by are up 8% year on year to 1205 crores, and net profit has risen 6% to 114 crores, both sequentially and on year. Let's get in touch with Mr. Agarwal to find out what were the broad changes that he noticed in the quarter gone by and how does the economy look ahead. A very warm welcome to you, Mr. Agarwal. Reasons thereof for this 8% rise in sales and 6% uptick in quarterly profit.
The first half of the quarter was a bit slow because I think there was just a little bit the weakness post monsoons, etc., that persisted. Subsequent to that, when the GST cuts started getting announced, I think there was a little bit more optimism in the market. And then towards the middle of September, things really picked up a lot of steam. I think the biggest drivers were clearly automotive, and we did record number of movements for automotive companies, as well as whether it is by road or by rail. In fact, the rail movement was just massive. We probably lifted, we were towards the end of September doing maybe 7-8 rakes a day. That is the kind of movement we did for that quarter. So the drivers were very high in terms of, the supply chain business kicked in very heavily with this kind of movement. So on the automotive side was what I mentioned. Then there's on the FMCG side, we saw, in the last few months, a lot of the stock has been built up. Inventory has been built up in the system. And that inventory is sitting at the warehouses or in automotives at the yards. These started moving to the final endpoints, which is either the retailers or even to the dealers and the consumers at the end. Hence, this movement also for the FMCG sector, for the consumer durable sector, for several of the consumption-driven sectors, simply because it was a festival season, also accelerated. So we saw a big bump up when it came to even things like our warehousing business. Then, of course, our rail business did reasonably well, clearly because of the impact of movements. And last but not the least, things like cold chain, etc., also got the benefit of all this bump up that happened. Net, it was a reasonably good, decent quarter. Margins are a little soft, but I think that's a little bit of the bench strength that we've created in our capacity in anticipation of more business for the next few months. And also there is some cost pressure in the system that exists.
Okay. Mr. Agarwal, what we'll do is we'll go through the basic numbers once again about guidance and about expense, and then get into your gut feel about how the economy is shaping up. Anything that you would like to share with viewers, shareholders of Transport Corporation of India on the remaining half of the current financial year in terms of guidance, in terms of top lines and margin?
Our guidance for the year has been about 10 to 12% on the top line and about similar for the bottom line. At this point in time, we are at 8% on the top line, about 6% on the bottom line. Second half of the year is always the best period of the year for us. So I think we should be able to maintain that guidance figures. I think on the profitability, there is a little bit challenge, but then I think we see that with certain contracts getting more and more, as in we started off some contracts, but now those contracts will be in full steam. So the profitability should start kicking in as well.
Okay, fair point. Now let's come back to the economy. Ladies and gentlemen, anything that moves in India from factories to you as a customer and anything that moves as raw material to factories is transported by Mr. Agarwal across the length and breadth of the country by road, by rail, and by ship. Now, Mr. Agarwal, tell us, what is the economy? What are your clients telling you? How has this GST cut panned out? We've had a great October. Now, what are the quick indicators within your company talking about the months and the quarters ahead?
Right. You're being very generous, Shailendra, that everything moves by us. But then I think we try to see wherever we can give the best solutions to our customers. And the economy per se, the capex in the economy is not kicked in to that extent. Capacity utilization is still at 77-78%. This needs to persist for a few months before we can really see private capex coming in. Notwithstanding, there is a intrinsic demand, pent-up demand that exists for consumer products, whether it is FMCG, consumer durables, or anything else. That means that there is the inventory that is existing in the system has gotten used. Now it needs to get replenished. The replenishment will start happening in the last already started from the raw material side to the factory level, and then from the factory level to the first level in the supply chain and the depot level, etc. Now, this would mean that there will be some movement, but perhaps not necessarily to the end consumer point. There are some product segments I think we are hearing about and listening that which still have a very large backlog of demand. So maybe washing machines or things like that. But that's not broadly across the system. I think there are some things that definitely have a certain amount of shortfall. Automobiles don't really have a shortfall. There are some models that might have a shortfall, but really speaking, everything else is available. So we are seeing that the stock is available with the dealers. We have in the automotive side, we have inventory at the yards. Sales for November will be softer, is the indication that we're getting. For December, some sales might get affected because it's a year change for the automobile industry, and January tends to pick up more. But we are hopeful that some of the interest cut that has happened, the income tax cuts that have happened, and subsequently the GST cuts that have happened, will propel some amount of buying. So that's on the consumer side. I talked a little bit on the private capex side. Government spending is still robust, though the pace of funding seems to be, or pace of execution rather, not funding, has slowed down a tad bit. Now, if that starts picking up, we'll really see a fillip to the economy in the next 4-5 months. And I'm pretty sure that the government is also looking to do that. Inflation seems to be reasonably okay, but when I talk to people across the board, nobody has said that in the last 3 years anything has come down in terms of prices. I can't think of any item that the prices have come down. So in reality, the hidden inflation still remains, and that tends to bite when you have when you try to use your savings for consumption.
Okay, fair point. Now let's look at within the economy on sectors which are showing strong traction. How about quick commerce? How did that perform in the quarter gone by, particularly in October, as also the broader brown goods, washing machines, fridges, air conditioners, and how about vehicles?
So consumer trends are starting to change at the urban level to some extent, and that is first is, I think it's a shift from the mom and pop store to organized retail. So you are going, people in cities, in urban centers are going more to stores, etc., to buy their daily essentials, and then that is now being appended by the quick commerce people. So we are seeing some areas where the basket of per order at quick commerce has started to increase, which means that we are not, as a nation, as a housewife in our country likes to stock some material for availability. I think that some of that has started to change, where they're saying, okay, I'm going to go on need based rather than on stock basis. So quick commerce is having some of that impact. And in the last few months, we've seen that pick up quite a lot. We are running warehouses for several quick commerce companies, and we see that this demand continues to be very, very robust. When it comes to things like consumer durables, etc., we are also seeing that there is a decent amount of uptick. But see that the middle segment has not picked up too much, is our sense. Some of the higher end segments have picked up, but there's a general demand. I think we also have to remember that in the last few years, the base effect has started to play out. We have had a lot of consumption, and that number is much higher. And on top of that, we are building, so it will be a little bit more slower in terms of growth. But yes, there is ample demand for consumer durables, from televisions to refrigerators to even cell phones, where we've seen a good amount of growth. When it comes to automobiles, I already talked about that. I think two-wheelers is showing a little bit of an uptake. Also, it is the marriage season. During the marriage season, we see that two-wheeler sales tend to pick up quite fast. Tractors have been doing well. I think the monsoons were good, so tractor sales are robust. Commercial vehicle sales are okay. They're a little bit soft, but there is a GST cut that has happened, so some of that buying will start to translate in the next few months. Also, that is triggered by demand. And on the four-wheeler side, I think we've talked about there's enough and more written about it. I'm not really an expert in that, but we know that there is still a substantial amount of inventory available in the yards across the country.
Mr. Agarwal, pain points. What are sectors, what are regions and geographies where things have slowed down in the quarter gone by compared with sequentially the first quarter or maybe even a year ago?
Well, I don't think geographically there's anything that is unusual in any sense, because there is a lot of, I mean, nationally, I think the distribution of consumption and distribution of production is well known. Well, in sectorally, I've not heard of any sector that is really doing abnormally bad, but cement steel have not picked up to that extent as we should. I think that was expected. So that is clearly indicating some amount of softness. Engineering products and things like that have also been slightly soft, though a lot of companies have orders. I think, as I said earlier, that it is dependent on government execution. So as that keeps moving up, we should see more engagement of those sectors as well.
Okay, so cement seems to be weakening. Now, let's look at the customer side of the equation. Which sectors, especially in the auto space, are sort of, giving you hope? Cars, how is the inventory now in the pipeline? Are they sending more cars to dealers? How about two-wheelers? How do you analyze that space?
Yes, I think almost all companies are doing reasonably well, because we've seen a bunch of launches in the last few months, and I think there's anticipated also several launches that are coming up in most companies. So all segments, or whether two-wheeler, three-wheeler, four-wheeler, we are going to see some amount of fillip. EVs are starting to pick up, but I think that's more on the last mile side, where that transition to at your home deliveries and so on at the urban level will all move to EVs in the next 2 to 3 years for sure, because that's the kind of expectation, not just from the market but also from cities, because the deliveries need to have some amount of the carbon footprint needs to come down. Trend-wise, expectation is all companies are doing reasonably okay, reasonably well. Of course, there are some companies that are doing exceptionally well, but there is moderate demand across the board.
Okay. At Transport Corporation of India, you generally spread your expansion as well as expense on all three parts. Shipping has been something which you've invested very well over the last 2-3 quarters or so. What's the progress there in terms of freight moved via ships? Is this something that's gaining traction beyond what was there in the same quarter a year ago?
Well, same quarter a year ago, the comparability is a little less because we had one ship that went for dry dock in this last quarter, which meant that we had less voyages in this quarter. So our revenues actually came down in the quarter. However, the margins are better because the fuel prices for shipping have been lower. And that has helped us in terms of margins. The business contributes about 13% of our sales, but a significantly higher percentage of our EBIT profits. We have 6 ships, and we have ordered 2 more ships that are expected to come in next year, towards the end of next year, calendar year, and that should augment our capacity in this space. We are also in the lookout for more ships, but if we are not able to find them, the second-hand ships. So right now, the capacity, we are trying to maximize the utilization of this capacity that we have.
Okay, so that takes care of shipping. How about the expansion in the road network? We've often talked about this, that it helps TCI move products faster as well as quicker across the length and breadth of the economy. Any further improvements in the road network that you see in the last 6 months which are adding to efficiency and maybe margins at TCI?
Not specifically, Shilendra, in the last 6 months. I think this is an ongoing project. Sometimes, you see dramatic improvements in certain sectors because some new road has picked up, has started really operationally. And in some areas, we see the investment is continuing. So the problem are usually the nodes. Those are places where we see hubs and nodes, the entry points and exit points in many cities, or even in things like the ports. The evacuation is also sometimes challenging. So net, I think the benefit is the benefit of the road sector. The improvements is just unparalleled, and I think the announcement recently by the government that be another golden quadrilateral, which is a mirror of the existing golden quadrilateral, should definitely help in easing traffic more and more and shifting traffic to road. However, the need for the country is not necessary to do that. I think it's a combination of all the modes of transport so that we are able to really bring down logistics cost.
Okay. My final question, Mr. Agarwal, all told, 4 months previously, let's look at February 2025 and now. In terms of tailwinds, we've had a good monsoon, GST rate cuts, liquidity injected by the RBI into the system, and of course, the earlier income tax cut that came in the budget. At this point of time, are you more hopeful for the 18 months ahead than you were maybe in the month of February?
Yes, I think we are always optimistic as a company also, and yes, February last year versus this year, sentiments tend to have improved. Notwithstanding, one thing has certainly happened with this income tax cut and this GST cut. Sentiments have improved across the board. We are seeing that MSMEs are starting to talk a little bit more positively. Consumers are talking more positively. Larger customers are talking more positively. Notwithstanding what's happening in geopolitics, but I think the sentiment factor has definitely improved, and that is reflective also in our thought process.
Okay. With that, Mr. Agarwal, we'll call it time on this quarter. He's wishing you all the best for the 6 months ahead, and we will again reconvene and meet for the third quarter once the earnings are out. The very best to you, and here's hoping that Q3 is better than Q2 and Q1 put together. Thank you for your time.
Thank you. Thank you.
That, ladies and gentlemen, was Mr. Vineet Agarwal, MD at Transport Corporation of India Limited, the nation's largest mover of finished goods inventory as well as raw materials across the board. Sales rose 8% in the quarter gone by, and profit after tax was up 6% in the quarter gone by. Thank you for watching. There's more happening on Business Today Television. Stay tuned.